Hey, good morning. This is Bob from Trade Genius on the 29th of May. I would normally say Happy Memorial Day, but I think that's a bit of an oxymoron. And I just want to, just remember those who've given their ultimate gift to us by sacrificing their life in the defense of our country and our freedom. And, it's a little bittersweet for me. I'm a former Marine Corps officer. I guess you can't say you're former Marine, but I'm not active duty for many, many years. And, it seems like the whole concept of America is going away, and now we have this separation of these people who are elite and globalist, and the concept of the nation state is really the war that they're having with Trump. And so, you think about it, you're going to go fight a war for the United States, but are you really fighting for the United States anymore? Or you're fighting for some global interests? And, we're going to need to answer that question. And I think, the future of our country, and I think the world's gonna depend on it, because there's definitely something at work here. And if you notice, Germany, Merkel is having an absolute panic attack here, because whatever they carefully stitched together with Obama, and I guess hopefully with Hillary, is now unraveling. And whatever these plans that were laid out are now in basically disarray. So it's going to be interesting to watch, what's coming up. And I think if they keep pushing Trump into a corner here, he's demonstrated that he doesn't lie down. So I think we're going to see some really interesting disruptions happening on the world stage. How they manifest themselves, I'm really quite unsure, but I think it's going to definitely be coming. And so anyway, I was just thinking about that this morning. And but those who serve in the military, thank you. Those who serve, our country in other aspects of trying to make it better, I thank you too. Going on to the charts here, I have there's really only two charts I think that really matter at this point. I think we now understand where the signals are coming from, and the rest is really noise that they throw out in front of you. And just so anybody talks about fundamental analysis, it's a joke. The whole this whole move has simply been a yield arbitrage game, and a credit expansion by the central banks in order to create some sort of measure of calmness and of prosperity. And really all it is they're protecting the banking interests and those who have assets, because incomes can no longer justify the asset prices, and we're going to see that more and more as we come through. And if you look here, I think in May, if you look at the yen, so they've been using the yen and volatility, and the bond markets to push people into equities, and specifically into the highest market cap equities. And but a couple things have happened here, if you notice. So I'm just going to go through here. So this blue line here for me is a moving VWAP, and this is looking back over the last 100 days. So here it was quite undervalued in terms of, and VWAP is a volume measurement, so it really shows the average price where the most volume has conducted in the auction. And so now it's pushed back up to what they would consider fair value, in terms of there's a lot of transactions that have occurred at that price level. And then you have the 100-day moving average right here as well, and price has jumped over both of them. And so now you look for a movement such as this now coming up. And then how I look at it here is that this is a consolidation in my view. This is a longer term stochastic, and usually when you see these moves, like here, see when it's more shallow and price is staying relatively flat, you can expect when this turns up, you're going to get a move higher. And that's what I'm expecting. And as the yen climbs higher, it removes a funding mechanism from the broader market, and it also, this is the gold suppression. So if you think FXY high, gold high, miners high, metals high. So that's why I've been in the metals miners long, watching the yen here, and I see no reason to take my positions off. I think we're going to get another burst higher. Now, if my intermediate stoke drops here below this black line, which represents 60, then the trend broke, and then I have to rethink my positions. But just bear that in mind. I'm looking consolidation higher at FXY, and if we go to TLT, TLT looks even more bullish. And so as TLT goes up, this is people moving into the bond market. And, to me, this is more of a measurement of fear than anything else, because, think about it. If you're big money, where can you move? Where can you put your money, right? You can either be in cash, you could be in the stock market, you can be in the bond market, and to a lesser extent, you could be in real estate through REITs, or you can move your money into the precious metals. And what I'm seeing here is that since the middle part of May, is money has been moving into the bond market and moving into the precious metal markets. Hasn't really affected SPY yet, but there's no volume in SPY, so that really doesn't mean anything. And I'll give you an example. So I live in Southern California, and out here real estate is a sport. People are speculating on homes all the time. I've lived here 25 years, and I've seen 3 or 4 boom and busts for home prices. And so you get to a point where, even in my neighborhood, prices started going up $25,000 a quarter, and it did it for like 3 years, and then it really started to move higher. But there's only a couple homes, and then there was one home that sold way above listing, and our jaws just dropped. Well, that set the price. So whenever you saw the headline number, you saw that price, but there was only one home that sold at that price. Within 6 months, the prices fell, and it's kind of like an example of the moving VWAP. It's just that the pricing is not being supported by the volume, so it can't maintain itself. And unless more transactions are occurring at that higher price, you're going to see prices fall. And so I think people are moving into the money, into bonds, and into the precious metals, because I think they think the Fed, there's nothing the Fed can do. If they raise rates, they're going to collapse the market. If they don't raise rates, then it's a recognition that the economy is weak, and I think either way supports that view. And if you look at SPY, SPY's pushing up again pretty hard above its moving VWAP, and it's very liquid, so it has a hard time getting. This is 1%, this is 2%, 5%, and I have a 10% one. But very rarely does price push up to here. And this move here, this is a 65 point move in a week, and all this was a bear ambush. And so now what I'm watching here is, we're getting toppy here on the money flow, and the stokes are rolling. So now I have to see if we're going to get a repeat of this, or if we're going to actually start to roll down. Now, my view is that I don't think it's going to be a big sell-off until the Fed event. And if it is because they want to force the Fed to not raise rates. But if we go into the Fed meeting fairly flattish and they don't raise rates, then I think you're going to see a pretty hard sell-off in SPY. Nothing's justifying the prices right now. And if people start moving money away from the stock market into other assets, then for sure you'll see SPY suffer. And as I say that, look at IWM. This is a small cap. This is supposed to be the growth engine of the United States, right? And IWM can't get out of its own way. Every time it sells off, they sure cover it back up to the VWAP, but there's no growth. And so this is a great one whenever it gets overbought to just sell credit spreads. I maintain a put spread on IWM at all times anymore, and I just manage the sold put leg to help either not lose money or to maintain profitability. And then when you get a big spike, you then you can roll it down, and that's where you make your most money. But I want to have exposure to the short side of IWM because I think when it breaks, this is the one that's going to break the most. And if you look at XLF, the financials are not saying happy days are here ahead. So this whole mantra of the economy getting better is not reflected in the banks. The banks would be the first to move, and they're dying. Nobody's borrowing money. Nobody can afford to borrow money. Those that have borrowed money now are seeing their interest rates rise. They're seeing their credit lines getting higher scrutiny. The with volume drying up in the investment banking side, that's drying up for them too. They're not, the interest arbitrage isn't there for them, and you're starting to see higher default rates. So this is not good for banks. And if banks go, small caps go, and if small caps go, it'll drive the broader market down lower as well, because not everything can be the top 50 stocks. And I saw an article, I don't know if it's true or not, or if it was just internet lore, but somebody posted that the top 50 stocks have gone up $270 billion in market cap, and the bottom 450 stocks in the S&P has gone down the same, and basically the market's been flat for whatever it is, 60 days. And I thought this was amazing to me. If that's true, then everything's been piled into the new Nifty 50, and when that unwinds, it'll be a disaster. So what we had a really good trade on this week was oil, and mostly in the futures market. But I'm bringing this up just to show you here. People keep talking about oil is going to get up to 60 again. I don't think so. So we sold down to the VWAP. Now we're pushed back up to the 100-day, and unless the dollar seriously falls out of bed or the economy seriously gets stronger, I'm expecting oil to roll over again. And there's just no demand, and the supply is just outrageous. And just so you know, America is sitting on so much oil that if prices do go up, will flood the market. It's just coming out of our ears. This whole notion of peak oil, and this is why I get so frustrated with the mainstream media and those in power. They don't give you information to inform you. They give you information to manipulate you. And 5 years ago, 6 years ago, all you heard was peak oil, peak oil, peak oil, peak oil. And, I knew that was not the case. And there was other scientists that said you can literally drill a well almost anywhere and find oil. And, because the process of creating oil is not as we've been told. And I'll give you an example. I mean, they're finding oil down, 2 miles, under the surface. Well, how did it get there? And it's in river basins. It's supposed to be like sediment build up and push, and you get oil, but it's not. So there's other mechanisms at work here that are producing, the oil, through subduction processes that are just shoving organic matter down deep, and then it moves across the mantle boundary and then gets trapped in non-porous rocks. But oil's everywhere. It's just everywhere. And the United States has it coming out of its ears. And, California alone could probably be bigger than Saudi Arabia if we ever drilled here, to the extent that we could. I live 3 miles away from a fault line that's just trapping hundreds of billions of barrels of oil. It comes up on our beaches all the time. And so this notion that they're going to be able to maintain these high oil prices is simply ridiculous. The other one I'm watching now too is natural gas. Is that it's been kind of flattish. Some it's tradable, but I'm waiting for now we're going into what they call the shoulder season. What it means is that you have a peak and then you drop down to the shoulder. And so, June, July, August is weakish, and then you get into the anticipation for the heating season. So, if we see another break here, right now it's rolled in money flow and stochastics are kind of at a bit of an odds here, but anywhere at 750 here or so, it'd be good to short. And especially if it gets up to 7.7 area, you could short it and make money. And probably the best way would be if you could sell. If it gets over 750, sell the 8 for credit spread. If it's around 750, you can just go ahead and buy puts and cover, and it'd be good trading. If you trade futures, it's giving you some good intraday trades now. And let's see here, what else do I want to show you? I want to show you SLW is very interesting to me. This is the one. Oops, I keep forgetting it changes. Many years of habit. This is my very favorite stock of all times. This is the one after coming out of the 2008 crisis where I made the most money. I bought it at I forget anymore, $7 or whatever, and sold it at 18 a couple months later, and then it went up to 35. And it was just trading in and out of it. It's just a wonderful stock. When interest rates fall and silver prices rise, you get a double whammy with silver Wheaton. And so I bought back in, trying to build a 5,000 share position on this, but I don't want to be a hero too. So I have 1,000 back in. I didn't sell calls against it for next week. I'm watching to see what happens here with the intermediate trend here, because it maintained above VWAP and it maintained above the 100-day. And if this turns up, I'm going to go ahead and double my position on this. And the thing we're looking for here is this a cup and handle here? So we have a double top. Now it's consolidating the handle. And so one of two things are going to happen. If it comes back up to the highs here, then you can do some quick measured move here. You're looking at, sorry about that. You're looking at, okay, why is it playing games with me here? Here we go. 1850, let's keep the math simple, to 2150. So you're looking for a $3 move. So if it gets back above 2150 again, it's going to go to 2450. That's kind of like the measured move of these cup and handles. And and I intend to take full advantage of it. So if we break this high, then I'll push all in on the chips and look for that $3 move. So anyway, so this is kind of my musings a little bit today. We'll be back at it again tomorrow. I hope you guys enjoyed your long weekend, and see you at trading. Bye.